Now we turn to the second stage of our panel, comments and questions. Dr. Ahmed Al-Khlefi, it looks that the fiscal policy that we have can be characterized expansionary, retiring debt, and building up reserves. How do you see the medium outlook and how sustainable the fiscal side in our Saudi economy?
This is a very challenging, of course, to have sustainable midterm policy. We know that the Saudis have adopted the diversification, and it has been in place since the 70s, and it is in our 5-year development plan. As Mr. Secretary just mentioned, I mean, this time it is different, and it is credible, and we are behind, and we are, in fact, we are after the diversification. And as you saw in the numbers, the non-oil GDP has been increasing from year to year, and it is not up to the ambitions, but they will grow, and I think still, the government, as you know, remains the engine of growth of the Saudi economy. However, the private sector is picking up, and it will lead the growth, as it happened in the 2009, when you saw the overall GDP was slightly 0.1 to the positive side, mainly was driven by the private sector. So if we come to that stage where the private sector would lead the growth of our economy, then we will be able to get to the sustainable budget, and then we will have less reliance on our state. We haven't reached that stage yet, but I think we are in that way.
Thank you. Alberto, one of the audience asked, does Citi have any future plans in Saudi Arabia?
That's a very good question. We have a presence in the Middle East of 10 countries, more than 3,500 people, and 15 billion of assets throughout the region, a large portion of which come to support our activities in Saudi. We, at this point, are more focused on relationships with government companies, multinationals, as well as financial institutions. We do not have a consumer presence in Saudi. We would like to at some point in the future. We certainly have that in UAE and in Bahrain and in Egypt and Pakistan, and remain fully committed to the region. Something that we feel very, very good about, and perhaps we didn't mention it when we were up there. As we travel the world, there are many bad things that we note, from real estate bubbles to governments that have huge indebtedness, to current account deficits, to poor asset qualities and low liquidity and low capital ratios in the banking system. If we turn that into the questions we ask ourselves about Saudi, we don't find a real estate bubble. We certainly find financial institutions with very good asset quality, liquidity, and capital ratios, and hence the importance for us as a foreign organization to continue to do more. Thanks.
Thank you. Ahmed, you have done good work in the stock market, but foreign investors usually ask about how much open this sector for the foreign investors. Can you elaborate on the situation now and what exists in the regulations, and what's the outlook in the future?
Is this me or Ahmed?
You Ahmed Al-Khatib.
I want to escape from this question. I think, you know, the Saudi is opening up the market gradually, you know. First, it was open through the mutual funds for the foreign investors. And the first mutual fund was listed, I think, in the early 90s. It was Samba Fund, and it was listed in London Stock Exchange. And then they open up the market through the mutual funds and through the swap contract 3 years ago. And hopefully soon the market will be open for the qualified investors. I think it is happening gradually, and we'll get there. You know, I think we would like to attract the long-term investment rather than the short-term hot money, you know, especially that the market is relatively small when you compare it to the potential funding that will come to the market. The Saudi stock market is the largest market in the Middle East. It represents about 50% of the Middle East stock markets. But it represents less than 4% in the MSCI Emerging Market Index. And if we transfer this into dollar amount, this is equivalent to $9 billion, which will have some impact if it flow together. I think, you know, just keep watching the market. Market is very attractive, you know, multiple at a very attractive level. Once the market open for you guys, just step in, but trade through us. Yeah, thank you.
Thank you. Secretary Cohen, I transfer many questions to you.
I have many questions here. The easy ones, first of all, let's talk about investments by Saudi companies in U.S. tech companies at the seed level, and this serves many advantages to the Saudis and to the U.S. True. Saudi Arabia is now becoming a significant investor in U.S. tech companies. They see it as being an opportunity to take advantage of a marketplace. The prices perhaps are a little bit depressed at this point, but also gaining access to technology that will be beneficial to Saudi society. That's taking place. And it happens to benefit U.S. companies as well that are in need of the capital, because our banks haven't been loaning as well as your banks have been loaning in recent years. I have a second question. How long do you think it'll take the United States to be back to a normal economy? Wow. Not for a while. It's very discouraging, frankly, to say this and to see what's taking place. We have roughly a $15 trillion debt. We have a proposal that has been pending before the Congress now to reduce the debt by $1.2 trillion, and they've been unable to get an agreement even on that. And I suspect that the market's already discounted. Assuming that we were able to get an agreement on $1.2 trillion, I assume Wall Street has already discounted that as being a given and will not move the needle at all. Certainly not in a positive direction, and perhaps even a negative one to say, is that all there is? There's a lot of blame to be spread around on this issue. I think personally, the president missed an opportunity a year ago on something called the Bowles-Simpson Commission. That was a commission that was put together and proposed by the president, and it had bipartisan membership. They came back with a recommendation, did not get the 14 members they needed to bring it to Congress, but they had at least 8 or 9, as I recall. And I think the president should have wrapped his arms around that and said, this is a beginning. They were talking a much more significant number, certainly in the range of $3 to $4 trillion to begin with. Passed up on that. He let it go. And now we're back to saying, what do we do now? And so they passed a measure to give a super committee. Think about this. Here's the United States Congress giving the power to 12 members, 6 and 6, to make a decision how we reach $1.2 trillion in reduction. And if we couldn't reach an agreement, then the cuts would go into effect automatically across the board. So now we face this prospect that they haven't been able to reach an agreement. And now we're looking at across-the-board cuts that will hit defense as well, and more significantly. So now, instead of defense having a $400 billion cut over the next 10 years, it faces the potential of a $1 trillion cut over the next 10 years. Now, that's not something that can be handled easily or necessarily is it desirable. Defense, our defense budget is coming down, inevitable. It should come down, and it will come down, but it has to come down in a prudent and responsible manner. Having across-the-board cuts is anything but responsible or prudent. And I think that there has been this psychological notion involved. You would think that the very notion of cutting defense across the board out of this, making a $1 trillion cut, would focus the minds of the members and say, that's not tolerable. Instead, I think they have gamed the system. I think what they have come to the conclusion is, well, we won't reach an agreement. The cuts, by the way, don't go into effect until next January, 2013. Guess what? After the election is over. But if you're in business and you have to make decisions, if you're in the aerospace or defense business, and you have to make decisions based upon the budget, what do? You say it's going to be $1 trillion less over the next 10 years, or are the Republicans going to take over the Senate as well as the House and win the presidency and put all the money back in? How do you as a businessman deal with that? How do you, as someone who's heading up at one of the services, be it the Air Force, Navy, Army, Marines, how do you plan for your force structure? Same force level, or do you start reducing the levels? So it is not an encouraging thing to witness how this could have come about. My guess is that not much will take place between now and next year in terms of trying to get the economy back on its feet. Republicans, I have been quite critical. Frankly, as a Republican, I wrote a piece for the New York Times about 2 or 3 weeks ago. As soon as the failure of this committee, this super committee to reach an agreement, I wrote a piece and said Republicans must bear responsibility by being locked into a totally ideological no-tax increase under any circumstances, no matter what, that we have pretty much locked ourselves into this ideological divide. If someone were to come to you as a businessman and say, look, I'll give you 90% of what you want. I'll give you $9 in cuts for every $1 in taxing. Would you take it? And the answer is most people would say yes. And it was rejected out of hand. So I think the long answer to your short question is it's not much will happen in the next year that I can say will be in a positive vein. I think we're all kind of waiting to game the system to say if we can just get to the next election, we're going to have a Republican majority that will then impose permanent tax cuts, will cut back on all of the social programs. And you think about it now in this country, you start cutting back on the Social Security, the Medicare, the Medicaid, and other so-called mandatory programs. And at the same time, you're going to put money back in for defense, what that's going to do in terms of the political dynamic in this country. So I think, I'm hoping that rationality will really surface between now and next fall, but my experience on having spent 24 years on Capitol Hill tells me it's not likely that I think we're going to be working the system between now and November to see who can gain the advantage for the elections, and then hope that one party or the other will take over a sufficient majority that can actually take some action. I have other questions dealing with the Israeli and Palestinian peace issue. I could take the rest of the afternoon to discuss this with you. Number one, many of you know that I have long been on the side of the need to create a separate Palestinian state, that the Palestinians need what the Israelis have in terms of sovereignty, dignity, economic opportunity, and hope for the future. They don't have that. And until they have that, I think the issue is going to continue to boil over to everyone's detriment in the region. The Israelis need to have security, and they will not have that ultimately until there is some agreement that is reached. How we bring that about, I think we all know what the parameters need to be. I think President Clinton laid it out pretty clearly and came close. It did not succeed back in 2000, but I think that it's going to. We know what the end result is going to have to be. The difficulty, of course, the issue about the settlements continuing, even though the president, all presidents have said we need to have a cessation of those till we get back to negotiating. That has not taken place, unlikely to take place. And then there is the issue of Iran. If you're an Israeli, you look at the world quite differently, frankly. If you look over your shoulder to Egypt, you say, Mubarak is not there. The peace treaty with Egypt may be called into question in future years, depending upon what happens with the elections in Egypt, and not only this time, but the next time. Will there be any kind of a strategic relationship with the State of Israel? That's open to question. If you look to Gaza, you see Hamas. You look to Ahmadinejad in Iran, not exactly a friendly face, is calling for your destruction. You look over to Lebanon, you see that Hezbollah is there. So they're living in an area which they see the enemies potentially on all sides. But I think it's going to be important that the Arab proposal that was put forth by King Abdullah was something that laid the foundation for going forward on it, did not move forward on it. We're going to come back to it. I believe that if you have the Arab countries, the Arab League, that is committed to Israel's security and recognizing its right to exist, then I think that's the basis, that along with what President Clinton tried to achieve, and also when President Mubarak tried to follow up following the collapse of those talks at Sharm el-Sheikh. I think that we have to arrive at that. I don't know if we can bring it. I don't think it'll happen this year. I don't see the political pressure that from within or without. I don't think that Benjamin Netanyahu is in a position to make the kind of decision I think that has to be made. So I'm not seeing something come forward in the near future. One hopes that enough wisdom will prevail. I think the majority of the Palestinians want peace. The majority of the Israelis want peace. The question is, how do we get them to agree to an arrangement that gives Israel what it needs in the way of security and gives the Palestinian state, the Palestinians, what they need in the way of dignity and opportunity and sovereignty and jurisdiction over their lives. They don't have that, and they need that.
Thank you. Dr. Ahmed Al-Khalifi, I am an investor. Do you recommend me to invest or to have business deal with the Saudis, and why?
Well, why not? I mean, that's basically the focus of my presentation when I focused on the financing side. And why? I mean, there are lots of investment opportunities, as it was mentioned also by Ahmed and in the other sessions. If you look at the doing business, it will give you some details and what are the investment opportunities and what the ease of doing business in Saudi Arabia. But if anyone interested and they visit the Saudi Arabian General Investment Authority website, they find the sectors that are not being discovered by the foreign investors, where they, although they are very attractive. So my advice and my strong advice is to go and invest. My focus today was about the financing part. And there is finance is being offered there from either from the banking sector or from the government. But I focus today just about the government. Thank you.
Thank you. Any more questions? Thank you. It is very informative presentations from our excellent panelists. And at this stage, I should conclude with a remark that Saudi Arabia is a growing economy. Reserves or international reserves definitely will guarantee a more medium growing economy and also more stable economy. The health of the banking sectors, as we have heard from our speakers today and early morning, is in a very good health. I think Saudi Arabia as a market with the GCC is a big market. Also, if you add to the free trade area with the Arab world, also it's a greater market, and it is, I believe, a good investment environment for investors to come to Saudi Arabia. Thank you very much.